Hey, everybody, Tom Gentile. Welcome to my Patterns and Profits podcast. We're in the middle of June. We're in the middle of the year. And that means I want to take a look at all the big boys and see where they are at the middle of the year. Man, guys, forgive me. Forgive me if I can't crack my back right now because I've been doing a lot this week. I've been a traveling man, crisscrossing the state, crisscrossing the country. Well, not crisscrossing the country, going up and down the country, the east coast of the country. A lot of stuff I want to talk about. I want to talk about the latest employment numbers. I want to talk about the Fed meeting. I want to talk about the Roaring Kitty podcast. And God, the biggest news story of all. And I'll get to that by the end. And, you know, I got my notes here, so I'm making sure that I get in there. Biggest news story of all! Exclamation, exclamation, exclamation. It's not that important to me. It's really kind of sad. I'll tell you about it here. We get to the end of the podcast. Man. Oh, and I got so much to tell you. I got to take some of the stuff and put it to the next podcast that I do because it's just too much stuff to talk about. These markets, they just don't want to go down. I really thought we were going to get a hiccup. You know, I got this. My son, who is he's a stock market guy, full time. That's his full time job. Well, he's also helps me out with research, but let me tell you what he sent me earlier this week. So he sent me a chart, and he said, do you ever see a market like this? And he showed me the breakdown of all the financial tech stocks, semiconductor, software, financials, communications, consumer, cyclical, industrials, consumer, healthcare, real estate, energy, utilities, and basic materials. Everything was red except for Apple. I believe that was Tuesday. And we were thinking, uh-oh, here it goes. Everybody's selling ahead of the Fed meeting. Somebody might know something. And then, of course, a day later, everybody's buying. Everybody's buying. Let's back up for a moment. Let's talk about non-farm payrolls, which come in last week. I think that was a lot to do with why it was selling, because non-farm payrolls increased by, 272,000 jobs in May. Unemployment rate was still at 4.0%. And so those were numbers that all of a sudden there, and then we were getting so many smaller things that were just showing the economy is still roaring along. And I think coming into this earlier this week, a lot of folks decided they were going to take the money and run, and there was some short selling that went on. Bitcoin had dropped like 6 or 7% in one day. Then it jumped back up, then it jumped back down. Now Bitcoin's all over the place. But again, I don't look at that as a today or tomorrow thing. I'm looking at where that's going to go at the end of the year. That's a different story. We'll say that for another time. So going into the beginning of the week was the glass was half empty. Then coming into Fed Day, the glass got half full. In fact, the glass got very full because everything popped in the morning. And I really thought it was going to be a pop and drop because there was just so much coming in. And so when I looked at what was going on in the markets, I was looking at the S&P. I was looking at the Dow. I was looking at the Qs. I was looking at Bitcoin. And some of these things rallied after Chairman Powell and the Fed decision. And some of them snapped back. Bitcoin, cryptocurrency, snapped back. Right? The S&P, well, it closed above 5,400 for the first time ever. What did the Fed say? I mean, the Fed, to everybody's surprise, no rate cut. That was sarcasm. S&P did manage a new all-time high. What ended up happening? Inflation slows. I think that's what really pushed everything off. Consumer prices are up about 3.3% from a year ago, but weren't they up 9% back in May? I don't know. I have to go back and look again, but consumer prices were up just 3.3%. They're looking for that Goldilocks area around 2 to 3% inflation. That's where they want to see it at. They're pretty close. All right. No rate cuts yet. No rate hikes. Fed holds steady. That was really everybody's expectation. But what they did was they indicated only one rate cut coming this year. So we might have to see ourselves well into fall, maybe into winter. But I'm thinking it's going to happen in fall before we see that rate cut. All right. So that was pretty much some of the big news that happened early in the week. Hey, let me tell you this. We're halfway through the year. So where's all the money going? Well, all the money, if you take a look at the S&P 500 and you break it down into the sectors, I'm talking about everything from materials and real estate to healthcare, consumer staples, and more. Here's where the money's going. The money's going into communication services. The money's going into information technology. That's where all the money's going. You know that when you look at the year-to-date highs, which are somewhere around 13%, give or take. Okay? 13%. Do you know that let's call it 45%. 45% of the move in the S&P 500 is coming from tech and communication. Then you got about 9% of it coming from financials. Okay? About 9% from utilities. That's kind of shocking. 8% of the gains are coming from staples, 7% from healthcare, 7% from industrials, and it just kind of, peters out. Real estate's down for the year. No surprise there. I mean, we're seeing real estate prices cooling off everywhere, but real estate's down more than 5% year to date. So when you look inside of those areas, communications, tech, financials, what are the top companies right now? What are the top companies, the best stocks for 2024? I'm going to give them to you. Here's your top 10 movers for 2024. See if one of your stocks is on this list. Some of them you're going to say, yeah, I knew that. And some of them are going to say, who's that? So number one, do you know what number one is? I bet most of you listen to this podcast. You're not watching it. You're listening to it. Most of you are listening to the podcast and you're saying to yourselves, it's got to be NVIDIA. Got to be NVIDIA. Nope, not NVIDIA. It's Supermicro Computer with a 170% year-to-date return. NVIDIA is second, okay? Vistra Corp clocks in at number 3. It's up 120%. Oh, by the way, NVIDIA is up, 150 this year, 140, 150. Constellation Energy is number 4. Wow, can you believe it? An energy company. It's in the top 10. It's not the only one. Up 120%. So number 5, you ready for this one? Decker's Outdoors. Yeah, that company we used to talk about in the 90s and the year 2000s. Yeah, up 56% year to date. First Solar kicked in at number 6, 55%. Howmet Aerospace, there's one I would have never thought of, 54%. Micron Tech, 53%. Moderna, 51%. And NRG Energy comes in at number 10, the top 10 stocks of the S&P 500 with a 50% year-to-date return. Okay, we talked about the goods. Let's talk about the bad ones. Oh, my goodness. I'm looking at this right now, and I can see 3 on here that I knew were on here. Yeah, I see 3 of them on here that I knew these were on here because I see them all the time. All right, bottom 10. Number 10, Tesla, down almost 30% for the year. Number 9, worst stock, Charter Communications, down 28%. Number 8, Robert Half, down 29%. Number 7, Paycom Software, that's down 29% as well. All right, Market Access Holdings comes in at number 6, and they're down 32%. Globe Life is number 5, 33% down. Lululemon, cracks the top 5. They're number 4. They're the number 4 worst stock in the S&P 500 this year, down 37%. Intel comes in at number 3, down 38%. Intel was just doing so good, and then April came along and cut them 40% literally in a month. Number 2, here you go. You got to know them. You got to love them. Walgreens, down 39%. That's no surprise to me. It might be a surprise to you, but number one worst stock in the S&P 500, EPAM Systems, down 40%. I'm just talking about the stocks in the S&P 500, folks. Get out there and you look at some of the NASDAQ stocks. You might see something that's even worse. Even worse. All right. Wow. Okay. Now I'm going to tell you this. Those ones I talked about that are tops, the top 10, if they're out of their earnings season, which most of them are, those of you that are option traders, gonna be cheap. We're seeing some of the cheapest options for the year right now. And it's because A, we're heading into summer. B, we're out of our second quarter of earnings. C, you don't get that much news that comes out in the summertime anyway. It is an election year. That's number 4. And all of those things just spell lower volatility. And they spill, for lower volatility, that means cheaper options premium as well. All right. So that's kind of important to know right there, is that those of you that are option buyers, this is your summer. If you like these, or if you don't like them, if you think Super Micro overdid it and they're going to pull back, puts are as cheap as they've been all year. Same thing with NVIDIA. Those of you think the bubble was popping on NVIDIA, then and you want to look at put options or out of the money put spreads. Yeah, they're cheaper now than they were. They've been all year. That's the thing with most of these. Those ones at the bottom, those worst for 2024, their volatilities are not that cheap because there's a lot of fear surrounding Tesla. There's a lot of fear surrounding Intel, surrounding Lululemon, Walgreens, and the rest of them at that bottom of the heap. And therefore, if you're bullish on these or if you're bearish on these, selling that premium might make more sense. It might be more probable to sell premium on stocks that have a higher than average implied volatility. Now, I was out last weekend. I went down to the harbor that is known as Port Charlotte, Punta Gorda area. How many of you listen to this podcast know? I know there's a couple of folks I know that are down there. So they built a $700 million resort in the middle of Port Charlotte. It's called the Sunseeker. And my wife and I, my brother-in-law has been telling us to go down there because he lives in Port Charlotte. And he's been telling us, you got to see this place. You got to see this place. Come on down. And so, my wife and I like to do these staycations every once in a while where we go an hour or 2 away from the house, go out for a couple of days or whatever. Sometimes it's just a day trip. And so we went down there and we had a good time. I'm just going to tell you about day 1. I'll tell you about day 2 on the next podcast, but here's day 1. So we check into this place, right? And we decide to stay. It's got 2 different places. It's got the main resort and it's got something called Sun Suites. Now, Sun Suites are suites, exactly what they are. They're suites, 1 bedroom, 2 bedroom, 3 bedroom suites. And, I like a little more room. That's kind of where I am now in life. I like a little more room. I like to sit up at the front of, the flights, the plane. I like to sit up in the front, with the human-sized chairs instead of those seats in the back that are made for children, toddlers. And so anyway, when I'm in a hotel, I like to stretch out a little bit. Here's the other reason. I like to be in a room where if my wife wants to sleep in and I'm up, I don't want to bother her. So I'll go into the living room part, the other part of the suite, close the door, let her sleep, let her relax. I'll look at my laptop. I'll turn on CNBC. I'll look at something to do. Now on the weekend, you can't do that. But we went there, and we were there on Friday. We were there Friday, Saturday. So I am in the living room. I turned CNBC on, and all of a sudden, something I completely forgot about. This is great about vacations and staycations. You can really just unplug yourself from whatever it is you're doing if you're at the right place. And I was wowed by these suites. These suites were really nice, and I was especially amazed by the water view. I mean, it really felt like we were on a cruise ship that wasn't moving. That's what it felt like. So I forgot what was going on last Friday. I forgot about the number one news story of last week, and that was Roaring Kitty's live stream that was going on at noon on Friday. I turned on the television, all right, the flat screen for those of you millennials listening. My dad used to call it the boob tube. How many of you have heard of that? So anyway, I turned on TV and I flipped CNBC on, and everyone's talking about Roaring Kitty, and I turn on Bloomberg, Roaring Kitty, Roaring Kitty, Roaring Kitty. I'm like, whoa, has he got something going on today? Oh yeah. He's supposed to talk about all the new revelations of what's happening with GameStop. And so I'm looking at this and I see the pre-market, because all of a sudden everyone's talking. I'm looking at the chart. Wow, this thing almost hit 70 before the market opened. 9:30 in the morning. I believe GameStop was around 45. This was Friday, last Friday. Now, by the time I'm looking at it, we're in the high 30s. It's already dropped down. I'm like, wow, it was at 70 this morning. Now it's in the high 30s. It's 12 o'clock. And my spidey sense is telling me, short this thing. This is being overhyped. Short it. And I looked and I thought, you know what? Let me, I don't want to short this stock. First of all, it's hard to borrow. The percentages to borrow are insane. Let me do an option trade. So I decided I was going to do the call spreads. So I decided I'm going to do out of the money call spreads. Now, out of the money call spreads, for those of you who don't know, I am, if the market, if the stock's at 38, which is where it was, I'm going to sell the 40 calls and I'm going to take in some premium. And then I'm going to buy some calls that are higher up as protection. And between the two of them, I'm getting a credit. So I sold the 40 calls and I bought the 45s. Here's the thing. I was thinking, who knows what this thing is going to do next week? It's 12 o'clock, almost 12 o'clock right now. Roaring Kitty's about to come on. I'm going to do the trade. I'm going to do the options that expire at 4 o'clock same day. 0 DTE options. All right, so here we go. So it's 12 o'clock, and I get filled, and I'm doing the out of the monies, and I get a buck. I think I got a $1.05 or a buck. Yeah, $1.05. I got a $1.05 for my spread. That means that whatever I sold the 40s, I bought the 45s. The difference between the two was $1.05. So I was taking a $1.05 credit in. My plan was to let these expire worthless. Okay. Sound like William Shatner there. Start date. 240607. I was on a planet Earth in a town called Port Charlotte. My wife and I were a fact-finding mission. Turn on CNBC. Roaring Kitty all over the news. 15 more minutes of fame. Where's GameStop going? Spock, I must know. Oh, my Lord. Okay, so anyway, what is a bear call spread? This is what this is. I'm selling calls that are closer to the price of the stock, and I'm buying calls that are further away. The ones I'm selling that are closer are bringing in more money than the ones I'm paying for. Therefore, I'm getting a credit. My plan was for both the 40s and the 45s to go to 0, and I get to keep whatever I brought in. It is a high probability trade, but I'm telling you, this thing could have went anywhere. But it had been dropping all morning long. It spiked a little bit when he came on, and I got filled because I was doing limit orders. And he came on. He was 20 minutes late. When he came on, it spiked up a little bit. I think it might have even gone against me a little bit. And then he started with the beer. And he had that sling on his arm. He had some sunglasses on. He had a bandaged up head. And he was drinking a beer. And I'm thinking, wow, why didn't I sell more? Because immediately my $1.05 credit was now an 80-cent credit. And then it was a 70-cent credit, a 60-cent credit. By the time he got done talking, I had already made half a buck. I'd already made 50 cents. It went down to 55 cents on the credit. Anyway, long story short, throughout the next 4 hours, that stock went from $38, that was at around 12 o'clock, and it closed around 29. It was down 40% just for the day. Okay? So, couple questions. What does out of the money mean? It means it's away from the stock price. The farther away from the stock price it is for a seller, the more probable it is to you, right? That it's going to be at break even or better. Now, for that, again, if I did a 5-point spread and I took $1 in, then I'm risking $4 if I'm wrong. I took $1.05 in, so I'm risking $3.95, but it's literally the same thing. Here's the thing. I make money if the stock goes down. I make money if the stock goes sideways. I might even make money if the stock goes up a little bit, as long as it doesn't go above 41, 41.05. That was my break even. So there you go. 40, 45. There's 5 points between the spread. If I take $1.05 in, you take 5 points minus what my credit was. That's my risk. All right. I take the $1.05 and I add it to the bottom strike. That's my break even. So what ended up happening 4 hours later? The stock just kept sinking. The options went to nothing. I didn't even have to get out of them. And so once again, I have to thank GameStop for another profitable trade. You know, I mean, talk about buy the rumor and sell the news. That was the best buy the rumor and sell the news that I think I ever could have done. So I bought those 45 calls and I sold those 40 calls. They both went to zero, and I didn't have to do a thing. In fact, all I did was look at it again, like around 3:30, and I think the stock was below 30. And I said to myself, "Wow, this is not coming back. I don't even have to worry about this. I'm going to go to the pool." And that's exactly what I did. All right. Hey, but you know what? I haven't even talked about the biggest news story. I can't trade this. The biggest news story of this week, man, Joey Chestnut is not going to be competing at the Nathan's hot dog eating contest on Coney Island on July 4th. For 16 years, this guy's done this. He's a 16-year champion. And they're not going to let him compete. Why? Because he's pushing veggie dogs now with some other competitor, and they will not allow him to compete. That is terrible. I think that is the dumbest bonehead mistake that Nathan's could have done. I don't think it matters. I think they should have let him compete anyway. ESPN's probably crying over it right now. ESPN, the Ocho, or whatever one. It's not ESPN, the main channel. They always broadcast this on, channel 7 or 8, but it's been getting a lot more notoriety. It's been coming down into into their top channels. They have got to be pissed because other than Joey Chestnut, I don't know who the rest of these hot dog eaters are. So that's the biggest news story I got for you. Maybe, Nathan's is not a publicly traded company. They're probably owned by somebody. I wonder if that's going to, if hot dogs are going to be affected by that news. So, all right. Well, guys, I am going to cut it short today. Next week, I'm going to tell you about day 2. I'm going to tell you about day 2 of my staycation. All right. That was a staycation turned meeting at a rooftop pool with an executive from a publicly traded company. And by the way, what I ended up doing on that news, and here's a hint, because you know me, I'm a pattern guy. You can't get patterns from talking to executives at rooftop pools. But I wanted to buy this company anyway. And they're giving me they're giving me 13% on the out of the money puts over the next 6 months. I couldn't say no to that. I did that deal. I'll tell you exactly what I did, why I did it, and all those details on my next podcast. Have a great weekend. I will talk to you soon. Bye, everyone.